Hi everyone. It's still two weeks have passed, and today we are having some technical difficulties. So first of all, I want to apologize and sorry for those who are waiting. So this video will be pre-recorded, and we will do our best to upload it as fast as possible. Okay, so hi Rafael, how are you?
Hey, Vi, I'm good. I'm good. Sorry, usually everything runs smoothly, but not today.
Yeah. So before the show, like 1 hour before our stream, I wanted to say, well, market is basically the same where it was 2 weeks ago, blah blah blah. And then the last hour was actually pretty fun, and market S&P sold off for like 50 points. So yeah, interesting. Of course, entire 2 week period was interesting, but today was also interesting. So, Rafael, are you safe? You played this down move, or was you long? And how was your trading overall?
Okay, so no, I didn't play on the swing account. I didn't play the bounce. I thought very hard about shorting today, but also didn't do. So I'm basically day trading since I unloaded my puts when I thought a bounce could happen. So I'm going to go through everything that has happened since the last show. I will do some screen sharing. Okay. Do you see what I'm sharing, Vi?
Yes, I see.
Okay, very good. Just making sure. Okay, this is hidden. Okay, all right. I'm masking the videos also here. Okay, so what I mentioned last time was, so we were expecting a down move. The question was, where would it bounce? Okay, so I unloaded my puts when we arrived at trend. I think the target was 500 for SPY. And I waited for my buy the dip signal to trigger. Unfortunately, it didn't. So I could have bought when some of the tickers I'm watching triggered oversold. I decided not to because I'm sticking to what I was planning on doing. So 3 of the tickers I watched actually triggered oversold NQ. So you can see here, this is the red bar here. So here was a good place to buy on the 23rd. You had also SPY that triggered an oversold. I think it was on the same day, on the 23rd. Let's check. No, it was a day, 2 days later, okay, 25th. And also you had SPX that triggered oversold. So anyway, the plan from 2 weeks ago was, so you can see here, the plan from 2 weeks ago was, okay, let's wait for the buy the dip trigger. And what we would be looking for was to get a retest of trade, okay? So what we got in the past 2 days, I guess it was yesterday, was a retest of trade on almost every tickers that matters. So unfortunately, the buy was somewhere here. I will go through what the range were saying and actually why the range were right on the fact that we could buy here. I decided to overlook that, but anyway, and the plan was to get the test of trade. Okay, so we have currently NQ, yes, trade is a white liner. RTY, QQQ. So QQQ hit actually perfectly trade. SPY. IWM. SPX, DAX, and just for the fun, our two beloved tickers for crypto. So we had Bitcoin, actually also went to trade and rejected. And Ethereum did the same. Okay, so 2 weeks ago, I mentioned we're going to get the bounce from oversold. We're going to go to trade. And the question will be when we get there. One, should I do nothing? Should I unload some and see what's next? Should I unload everything? So from what I see regarding the retest of trade and the rejection, my bias would be to actually to have unloaded what you loaded for the bounce, because we went to trade, we rejected, but this is not everything. Some of the tickers that we watched had switched trends from bullish to neutral to bearish. And this is another reason I decided not to buy when we reached trend, is because first I thought the move would go lower and I expected a break of trend. I posted something on Twitter saying once trend is broken, we have to wait for oversold to buy. And now that we have bounced to trade, the problem is a lot of tickers remain bearish trend. They have been unable to reclaim the bullish trend in which we have been for several months. And in my opinion, this is concerning. Those tickers include Apple, Bitcoin, IWM, Meta, Microsoft, and Russell. Also, SPY tried to go bullish. I think it stayed there for 2 days, right? I'm not sure, and now back to neutral. I think QQQ was unable to reclaim a bullish trend. It went to neutral, stayed there, and now I just saw, I updated the data at the close. QQQ is back to bearish. Okay, so again, in my opinion, this is not bullish. But there are some signals saying, okay, we should get, in my opinion, again, another sell-off. And this sell-off, for now, based on the data, is contained. Contained how? We have caps. We have caps on the downside. We have caps on several tickers that matter. IWM, Meta, QQQ, SPY. We have SPX, NDX, Russell. But we also have caps on the upside for DXY and UUP. So based on that, on my opinion, the next dip could be a buyable dip. I hope that this time my buy the dip signal will trigger, so this way I can join. But based on everything I said, play the a lot of tickers broke trend. We could have played the bounce from oversold, unload at the retest of trade, and on some MFR tickers, actually it was a retest of trend. See what happens. And if you still have positions, maybe unload and wait for the next dip. So this is, I think, the best way. It would have been the best way to play it. Okay, so this is some data based on what I see for the tickers I have mentioned. Second, I want to address another thing that I forgot to address the last time we talked, was actually yields. So I see many people on the Twitter, sorry, trying to time the bottom for bounce. So the problem is, if you look at yields, the 2-year, the 10-year, the US 2-year, the US 10-year, the US 30 years, 30-year, but also European bonds, European yields, sorry. They are very, very bullish. Okay, so there's no point in buying bonds right now, considering that you have bullish trade, bullish trend, and there's absolutely no signal telling you to buy bonds.
And look at that beautiful upside downside ratio here.
I saw. Yeah. Yeah,
Oh,
it's. I
yeah.
mean, it's man. I see people that are trying to time the bottom in zoos, and it's insane. And one other data that I watch, you like this one, I always mention it. I always mark the minimum daily trade value that you get before you can consider at least to unload a position, long if you are. In that case, let's say you are short bounce. Before you can see, before you can consider a top in the asset to unload, or either to maybe start a short position. If you look at the mean daily trade value for US 2-year, US 10-year, I didn't mark the 30 years, but I guess it's the same. We are still not there, meaning yields still have upside. Okay, so this is something to note. I would not buy bonds now. And if you are still short, I mean, it's totally understandable if you are still holding this beautiful short that has been working since we confirmed the switch to bullish trend in most US yields in the middle of middle of March. Okay, this is for yields. Then I want to move to CL, so oil. I mentioned 2 weeks ago that I expected for some weeks to have a top in the $83, $86 range. The reason was that trade of CL had reached my minimum daily trade value, and we should not expect CL to go higher, except if we had a crazy ramp up, let's say some crazy war, etc. But the most usual suspect was to expect a top. So this is what we got. We got a sell-off, retest of MFR trend. So if you were short, it would have been a good time maybe to unload your short, or at least unload some. If you were planning to go long, maybe it was an idea to start buying there. Now the problem is we had the bounce to trade, and we are starting again to see some sell-off. And if you look at the volatility here in blue, you are seeing that, okay, we went above, and now we are using the trade of volatility as a floor, meaning that vola could very potentially start to move up, meaning that CL could start to really go down. So let's say you are short from this area, and loading at the retest of MFR trend, and loading some was probably a good idea, but I would not be surprised to see a retest of vola trend around 76. Okay, so this is something else to consider. Another thing I mentioned also in the last show was JC. I explained that the pattern was the same as for CL. JC had reached the minimum value for trade. Here you can see I marked it at 1.9. For the people who are subscriber of MFR with premium access plus at least 100 extra ticker subscription, you have access to all these scripts. Okay, and I encourage you to look at what I'm talking about. Mark the mean daily that you see on the vola script. You can use this for anything. This will give you a good idea of when to unload and when to actually maybe consider a short. Okay, you can look at this for the whole historical data, and this will give you a good insight of when top could happen. So coming back to JC, so I was mentioning that we reach minimum value on the daily for volatility trade, and we should expect, it was very dangerous to buy, and we should expect some volatility to come back. So this is what happened. I think the show was on the 17th. So I mentioned this, we were here, and boom, what happened? Okay, sell-off, retest of vola trend, retest of trade, and now the sell-off continues. And you can see in blue, volatility of gold is starting to rise. Okay, so I would say best bet would be if we get some continuation, the retest of MFR trend. Okay, this could be your target. I would encourage you also to monitor the buy the dip script because it's working for JC. I think it's working for gold and or GLD also, but it's working for JC for sure. So, so yeah, again, I think the sell-off is not over. Volatility is starting to rise in gold. So if you want to go long, I would expect, I would wait for maybe a retest in this area in 2245, 2240. That would be I would guess, a better idea. Okay, now for the bull case. So let's go to VIX. So VIX actually got some sell in this area from the 15th to the 19th. So sell on VIX, telling me the probability for the VIX stop at this juncture was very high. Also, VIX actually reached its minimum daily trade value. It's the one I have is 15.6. So I think, no, sorry, it's, yeah, 15.6 seems to be the right data. 15.6. Again, I encourage you to mark this one. It's pretty useful. And what happened is volatility of VIX starting to rise. Of course, what you get is VIX selling. Okay, so now this is actually very good for bulls because once you have reached minimum trade value for VIX, what you get is usually you get a new cycle with volatility of VIX starting to rise, and this kind of cycle actually is the last. Okay, so the question will be, okay, so what happens then to the volatility of VIX? I would guess we should get a retest of trade of volatility of VIX, sorry. So around like 16 to, let's say, 17 in this area. And this is where probably we will get a bottom in equities. So I would expect VIX to get there, and then we should enter a cycle where VIX is actually decreasing again. So that's a bias I have. So of course I will have to monitor NQ, ES, SPY, etc. All the other assets, bonds, oil, etc. to make the decision. But that would be a guess. Also, I would be very, very happy to see the buy the dip trigger, the buy the dip script trigger when we are there. Okay, so I think I've done. I explained what I see. Vi, I think you can take over.
Really interesting. So my rant will be shorter. These days, I look basically at a couple of different things only. So, which is correlation, of course, one of those, and risk profile. And risk profile is our ranges upside downside ratio. What I mean is whether the risk is more skewed to the upside or downside. So I'll share my screen, but what changed? What changed from our previous meeting, where I was quite bullish, and honestly, I still am, but a couple of things that they did change. You can see my screen?
Yes, I can see, right?
Yeah. So our beloved stock bond correlation. First, let's go to 30-day correlation. It will be way more. When we had our last meeting, it was basically zero. I believe 14 days ago it was 0.05, something like that. But stock bond correlation is going up, and currently it's 0.2, which is, of course, for stock bond correlation, it can be considered quite high. So what does it mean? Again, but maybe we are entering into a regime where we will get quite a few sell-offs, both to the upside and downside. So basically, I expect volatility to increase. And regarding the point that you also said that maybe the next dip will be the one to buy, I would encourage people to monitor correlations, both stock bond and stock dollar, across multiple horizons to see, because to look for that, because if stock bond correlation remains positive and even goes higher, historically it's a very, very good signal, not necessarily of a bear market and big sell-off, but of increased volatility and oversized moves to both sides. By oversized moves, I mean moves of more than standard deviation. So if this remains, we will. I expect that we will have more days like today, where ES. And ES is my main trading instrument. So where ES is moving like 50 points down 1 hour, and then it goes back 30 points and so on. So this is very important. Overall, sector correlations are not extreme. Average sector correlation for 30 days is at 0.7 approximately. So it's going up, worth mentioning, but it's still not overcrowded trade. So no need to think that everyone is already in their positions everywhere. So no. So and that means that it can go down more, because if some people will say that, oh, after these moves everyone is already short. No, they're not. Especially when it comes to other sectors like utility stocks and of course energy is a beast now, totally different beast. But XLU is very interesting, and actually I'm thinking about going long some utilities. I will search for good signals, but I'll come back to this ES chart a bit later because I want to show you something. But yeah, when it comes to XLU, usually I don't like buying things close to their highs, but now if we get a good dip, it means upside downside ratio, which makes sense. Then I'll start looking at buying, because now, of course, upside downside ratio is not there. But actually, today I was not looking into this chart because I was it was very busy day trading. Yes, so now I see that the same thing is here, and I'm sure that the same thing is on a lot of important instruments now. So downside is capped. So and the end of day downside was basically capped, and the current real time dead for signal for tomorrow is also totally capped. It means basically when there is a cap, it means regular range and longer term range level is close to one another, or in some cases even the same. It means that if a price gets there, it's a very significant signal for a reversal. But yeah, so XLU is XLU, but I wanted to talk about ES. And what I was looking at when I was doing my prep for today. So it means just preparing for a trading day. And one thing to note, that for a couple of days and especially even today, there was not a lot of upside compared to the downside, even though the same signal that downside is capped. That's why I would agree with Raf, if not correlation. I would agree that this dip is very viable, because if we get price to somewhere here, so 2% more down, it will be a very nice spot to initiate some longs for those who are not day trading but doing longer term things. So yeah, so I agree on that if the signal does not change, and if we get a quick sell-off, so it means in the next couple of days. Why? Because if we get a slow sell-off, the signal will of course change. And it's very important to monitor all these changes. But But if we get a quick sell-off, below 5,000, it could be a nice spot to buy. But for those who think that this sell-off has no legs and so on, based on correlations, I'm not that sure. It means that we can have increased volatility. Let's compare other contracts. So NQ also it was neutral, and now it's bearish again. So congratulations on that. We'll see how it holds. But almost everywhere where it is important, we have a very capped downside. But actually for NQ, it's in percentage terms, it's more than a couple of percent. So of course, those who are trading NQ, I know Rafael is trading NQ. I can trade NQ. I mean, I love ES because NQ is just moves too much. For those who trade NQ, you know that. I mean, 2% for ES, 4% for NQ doesn't matter. Same thing, yeah. So keep that in mind. But if we get to these levels quickly, I will buy for sure. Of course, initial position, not all in or something. It's this process is based on risk management, not on gambling. So but if we get very quickly, I will buy. So that's about the main signals. That basically, I will just repeat that correlations are not high, but stock-bond correlation is positive, and it's same in our period. So short term, so 10-day correlation, it's quicker. It's also going slightly up. We can see that. So worth mentioning. I just wanted to say that. That if even in a short-term stock-bond correlation is there, so I would not expect yields to go down. So I would not expect those who are, like Rafael said, are trying to pick the bottom in bonds. I don't think that it's now because obvious. And for the last couple of years and for the previous crises and sell-offs, so both COVID and 2008 and before, stock-bond correlation is very important to watch. When it's negative, you can feel safer. Playing the upside, expecting volatility to go down, or when it's negative, or at least it's sloping downwards. And now it's positive and it's sloping upwards. So for my day trading, I just trade the signal. For longer term, no, I would not go heavily long now. But if I'm talking about a hierarchy of signals, I will still use, of course, upside downside ratios, especially caps on upside downside ratios, and trends first, because correlation is showing me the entire regime, and I want to stress that correlation is not trading signal, because I received questions and both on these streams and Twitter, and that, hey, how can I trade using correlations? And it's good and bad question at the same time, because some people assume that based on correlation number they can do some trades. No, but based on correlation number, you can know what regime you are in, and it's very important. And then when you know what regime you are in, you will know what is a probable move in the market and what is not probable move in the market. So that was mine. I spent that was my rant. I spent these 2 weeks traveling, meeting with clients, and basically my trading was day trading ES when I have some time. That's what I do on my funded accounts. And for the main portfolio, I closed Bitcoin. I had a Bitcoin long. I tweeted about it. Actually, I closed it with a slight profit. I mean, it doesn't even count. We can call it even, because I just saw that that thing is not going anywhere, and halving did nothing, and signals, even though signals remained the same for quite a long period, it changed only a couple of days ago. I decided that momentum is not there, so it's not worth holding that. So yeah, no longer-term positions. Today I played based on upside downside ratios, and that's what I do in most cases. But always, of course, never ignoring the trends as well. So yeah, that was what I see in these markets, and I want to encourage everyone to watch not only ranges and asset-related stuff. So asset-related stuff is, of course, all the tools and indicators that you use for specific ticker, but also watch the entire market. What is going on? So watch correlations. What sectors are highly correlated? What is the relationship of risk assets with bonds, so stocks and bonds, commodities, and so on. This way, you will have way better view of what's going on, and when you know what's going on, you will be able to make smarter moves. Yeah, so I hope it was useful, but yeah, I don't have much to say about this, and we will see what the market will do. I expect volatility to actually increase a little bit.
Yeah, I want to also show something that happened when we actually had this bottom that happened last week. Because if you were using the range signal, so I'm going to show you on the hourly and then I will show you on the daily. So this is NQ, and we had a beautiful dip right below the range. And right after that, we had the so-called bottom. And if you play this move, let's say you bought when we crossed here and the cap started to appear, and you play the bounce, that's a 700 points move on NQ. And you can see on the daily, it was that day. Was that day here. Beautiful buy actually. So I didn't play it again because I was waiting for a clear buy and some triggers were on there. And you had on the MFR, the upside downside ratio was insane in favor for bulls. And to complement what Vi was saying, the upside downside ratio for the past 3 days, 4 days past 3 days wasn't there. If you didn't buy the dip when it happened, the past 3 days were not the days to buy. We had upside downside ratio at 0.2, 0.3. Sure, the long-term upside downside is still in the favor for bulls, meaning that it will be interesting when we get where the next sell-off ends. But it was not good if you chased. So this sell-off today, it's not surprising. We reached trade on many tickers, and upside downside on MFR was terrible. And this is something we always stress with Vi. The first thing you're going to look at is the upside downside ratio. This will tell you a lot about the day, what happened from this particular day. I want to say something else also. I had promised to do a video about how to use a volatility indicator. So I was supposed to do this actually between the two shows, but I got COVID, so I was totally TKO for a few days, and it was the days I had decided to do the show. So I promise I'm going to do that before the next show. I'm going to do a special video about how I use the volatility indicator, the one I always mention about how to pick the top and how to pick the bottom. I will also tell you how I use it for day trading, because you can use this on every time frame. I mean, I use it on the 3 minutes, I use it on the daily, I use it on the hourly. So it can give you a lot of feedback about what is going on, and for the big picture, the small picture, just when the market is supposed to bottom on any particular intraday. So this is very good. So I will do it. And the last point, why, is this is a question that keeps coming, and I have a hard time expressing my opinion regarding that, because mostly I trade very limited number of assets, NQ, CL, ES, gold, I mean silver. I mean I'm not going beyond maybe some stocks, but one question that comes back is, how do you build actually a large portfolio? Let's say you are a retail customer, or maybe a hedge fund or something. How do you use actually the MFR signal to your advantage while you are attempting to build maybe a portfolio that has, let's say, more than 10 assets, 20 assets? How would you go about it?
Yes, very good question, and it's a very wide topic, and I talk a lot with institutional clients about that. So the quick answer would be, you can ditch regular term range for good, and use longer term range first of all. So this is number one. You use longer term range. Number two, you buy assets you want to buy, so you are interested in when there is a capped downside and the upside downside ratio is in your favor, and of course the asset trend confirms that. But that's number three. So this is how you. I'm assuming people in the retail world, they are mostly doing long only. So today I will talk about long only, which of course this same thing can be applied for long short portfolios. You just need to reverse a couple of things. But basically, when a stock I assume it's a stock. When a stock you like has a very favorable longer term upside downside ratio in a bullish trend, and especially when that asset broke and became bullish not long time ago. So of course, let's say we got a dip and then it was neutral or bearish and now it's bullish again. So these two things combined, it's a good time to buy an asset. Now, of course, this model is not from the fundamental model. So it means this model doesn't know if tomorrow's CEO will do something stupid or what. So building portfolio is not about just using scanner on MFR or something and buying based on that. So I want to stress that, of course, it's not a trading signal, but it's a risk management tool. So that's why what I'm talking now is I'm stressing the sentence is the asset you want to buy. So that one. And now how to build a portfolio. How to build a portfolio is, of course, you don't want to build a portfolio of assets that have all of them have a correlation higher than 0.8. I'm saying 0.8 because we all know that equities, I mean, will have positive correlation. So because if you buy assets that have like 0.9 correlation or 0.95, you will be like Cathie Wood. I mean, some years when you are right on a sector, you will be right on a sector, and then you will have returns that are amazing, and you will think that it's the right way to do. But no, in other years that will not happen. So if you want a more diversified portfolio, of course you need to check the signals for sectors, and we can use the macro and micro ETFs, so for both sectors and factors and that. But I will not talk now about the portfolio construction based on your macro views. For example, personally, I use macro data, all the things I learned from my days as an ITPM trader, so student. I use leading indicators like ISM PMIs and equivalent reports in Europe and Japan, and then I find sectors that I'm positive about. And actually, ISN PMI is amazing tool. Literally every month, they say that these industries are growing, these industries are shrinking. There's some components are even leading to PMI itself, like new orders, for example, and you see that this sector now has new orders are increasing. So you think, okay, so maybe I can expect that this sector will beat earnings next cycle. So then you dig deep. So top down is fine, but when you need to do bottom up, you dig deep into a sector using NICE or GICS, so North America Industry Classification System or Global Industry Classification System. You find tickers in the sector or industry you are interested in, and then you check the stocks. So I use options for that. I mean, all my portfolios that are longer term portfolios that are not for years, because honestly, if you plan to hold an asset for years, well, you need to decide on the company you like and just buy when you want to buy it. That's all you need to do. It's very hard, but you don't need to buy based on some upside downside ratio if you want to hold the stock for 10 years. But in a hedge fund world and in an active investing world, this period is usually 3 months, 6 months ish. So that's what I talk about now when I say these portfolios. I use options. I use option structures for that. Long option structures for sectors and industries, I think, will beat, and short option structure, put structures for those that I want to short. So, yeah. So to find the stocks, longer term range upside downside ratio, make sure trend confirms it, but also in most cases it's not a good idea to buy even if it's a bullish trend, but let's say trend level is already 20% below, and if that happens, it means that stock already had an insane run up. And we see some stocks that it's very bullish, trend is far away. So if you hold that and want to add to position, it's a different story. But if you just want to initiate a position, then maybe it's not a good idea. Of course, we all know from stocks like Nvidia and others that it can be high and it can go way higher. But if you want to have a high probability, that's not what you do. Yeah, so trend upside downside ratio and correlations. And I can show how I come up with ideas, but that's another topic for maybe let us know if you are interested in that, because it will not be charts. There will be no charts in that, because idea generation for me is a macro driven process. So that's why in the beginning I was not very willing to add a scanner on my fractal range website, because people were asking, hey, can we get a scanner? Can we get a scanner? Yeah, of course you can get a scanner, but I'm afraid that people will buy a stock that they know nothing about just because they will see that whatever Hearst is high, upside downside ratio is good, and trend is bullish, and then they will not know that maybe that company will, I don't know, recall their entire product line, and that stock will go 60% down. So yeah. But from the range perspective, that's the most important thing: longer term upside downside ratio and trends, and another thing, if you plan to just buy a stock you love for 10 years, then I mean, honestly, I will say honestly, because that's the same what I do I have some names that I like, names that are not very popular, and some that are popular stocks like Palantir Realty Income for dividends, some other REITs, of course, SPY ETF and others that I just buy and don't plan to sell. That's what I do. I mean, that's what I do. It dips, stock you like made a dip, you just buy. But that only applies if you really want to stick it into your pension. If it's active portfolio management, we are talking about 3 months, 6 max, because other than that, institutionals will not tell you, but I mean that's what hedge funds do, and yeah, so
Okay,
3 months.
so yeah, so basically, let's say you want to build a portfolio for medium term, you look at
Yeah.
longer term range, and you look for assets that are not correlated to each other, so that at least
Well, they will be correlated to each other, but not crazy.
yeah,
For
not crazy.
example, I know that most of our users are from the other side of the pond. We are here in Europe. Most of our viewers are not. So, how to build a equity portfolio which is not highly correlated? Of course, you still need to do fundamentals and have an idea about companies and sectors and economy, but how to reduce correlation. And it's actually, that part is not hard if you are willing to do the work and learn about other markets. Because if you add some Japanese stocks, some maybe German stocks or stocks from London Stock Exchange or so on, believe me, your portfolio volatility and correlation will go down. I'm not talking whether returns will necessarily go up crazy, but your correlation will go down. That's for sure. And I have some Japanese stocks. I really love them. I like Japanese market. I have some UK stocks and German stocks, and I have stocks from Sweden and Norway, and I mean, I even have one stock from Australia. I mean, that's what I have, and basically, because especially if you are into growth stocks or into dividend stocks, so it means you have some investment style that you are only interested in one type of securities. What will happen if you are investing in one type of securities and from one country? Well, guess what? I mean, all US dividend investors buy the same stocks, and on the same day, but if one will go up, another will also go up, unless there is some major news. So like there was the 3M or even J&J had this. So if there's no news, your portfolio will be like 0.9% correlation, and you don't want that. And if you want to be in equities, if you maybe you want to invest, I don't know, in cars or in technology or in some real estate related things, don't forget that liquid and highly regulated, efficient markets exist not only in the United States of America, basically. Because, you know, of course, don't invest in some, my opinion, some markets like China or whatever. But I mean, highly regulated capitalist countries like Western Europe, Japan, Canada, and a couple of others. I mean, these markets offer amazing opportunities for real. So that was just another advice of how to build a portfolio that you can actually call a portfolio, because having 5 stocks with correlation of 0.95 is not a portfolio. It's the same as having five times bigger position in one of these stocks. So it's not a portfolio.
Yeah, a quick side note to say that we actually cover in MFR, we cover a lot of markets. So from the platform, I think most of the developed markets are covered. And if you have access to the scripts, you have access on TradingView. And I know why you build the scripts for other platforms that we shall release, I would say, in the next 2 months.
Yeah, it's not a secret. For my main trading, I use the platform which I think is the most efficient and professional platform for active traders, which is Sierra Charts, and all indicators are available. So if you want access to Sierra Charts, sweet, you can just send us an email. Also, we will release for a couple of other platforms, NinjaTrader. For those people who ask for Thinkorswim, it will not happen. Thinkorswim does not allow that. They don't have capabilities for that, so it's impossible. But Sierra Chart exists for those who want, and the NinjaTrader will be available, even though I don't know who on earth would use a platform like that? Sorry for my French, but it's people. So, but yeah, it will be available. And zero chart is, I use it every day. So if someone wants access and has enough tickers, it's very easy to arrange. But yeah, but like Raphael said, actually, when you subscribe to the amount of tickers, which allows you to have access to indicators, basically your amount of tickers becomes unlimited. Because we have no plans to limit tickers on TradingView, so what it means, basically you can use our indicator on any ticker on TradingView then, when you have access, of course. So yeah.
Yes, yes. We have a release for an update. I think it's mid-May. So a lot of goodies will come, and then we will just we have the scripts for the platforms. We just need to structure the tab on the site. Currently, it's called TradingView, but we have to make some modifications so that users can actually claim access for other platform for the script. They shall be
and if you, for example, use
so you know.
yeah, so and if you, for example, use zero charts, you can send us email even now. I mean, it's possible to arrange, even though it's not on the website, but it's possible to arrange, not hard to do at all. So yeah, but I talk with a lot of retail traders and our clients also on Twitter, via email and so on. And I see that the majority of people, retail investors in the US, some are scared to invest internationally, but majority, they are not scared. They just think that the only efficient market is in the USA. No, it's not true. Like I said, German, UK, Japanese stock markets are insanely liquid and highly regulated, and with plenty of companies, and some other countries have very liquid stock exchanges. So yeah, and then you will see that correlation with, for example, now it will be just average number from my experience, but for example, average Japanese stock has a 0.3 correlation to SPY. I mean, so it's not highly correlated at all. So just an example. Yeah, average Japanese stock will be not highly correlated to SPY at all.
Okay, very good, Vai. I think we can wrap it up.
Yeah, sure.
And maybe you can do a video about portfolio construction. I mean, definitely this is a question that keeps popping. And today, because I was talking with a user today, he was saying that his issue was he wants to build a portfolio that he can manage like once a week, once every 2 weeks, don't have to look at it too much. And yeah, he wanted some guidance about how to do. So this
yeah, so I can just to wrap it up, based on what you just said. I mean, it's impossible to tell because you don't know the time horizon, what of a person, what he calls a portfolio. Is it a long short? Is it a long only? What he wants to do with it? Because if he says just to look once or twice a week, well, I mean, yeah, but when it's a long short portfolio, maybe, but for long only portfolio, if it's a portfolio, it means you manage it actively. You will have to look at it at least daily to see.
Yeah, of course, you don't have results without work. I mean, without hard work. I mean,
Yeah. But how to structure it? That's what I said. I mean,
okay.
And about portfolio construction, how I do it, I can make some videos on my channel because I will show you. Actually, I can show it because quite soon I will come back from my trips, and maybe when the next ISM PMI report is out, we will come up with some trading ideas. We'll see. Yeah.
Okay, very good, man. Okay, so sorry again for this issue with the technical. I have absolutely zero idea why it happened. I did the same thing as usual, but it didn't work. We'll try to fix it for next time, and I'm gonna try to post this video also on Twitter to get more traction. And then that's it. I mean, if you have any questions, please feel free to ask. We always reply to emails. So, I mean, just ask us. And you know my view. Okay, I have expressed everything. You can watch and rewatch. And let's see. I want to buy the dip, you know. I want to see this script trigger. I really, really, really want it because I think the next dip we'll see some crazy people on Twitter call for Black Monday or this kind of stuff. And I think the next dip will be quite good to buy. Anyway.
Yeah, sure. So monitor correlations, monitor upside downside ratios, and don't go crazy all in on longs or shorts. That's not the right way. Okay, so sorry everyone, and hope it was useful. See you in 2 weeks. Bye.
Take care, guys. Bye bye.